The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
And joining us now to discuss the crypto markets is Ben McMillan. He's Chief Investment Officer at Quantitative Asset Manager, IDX Digital Assets. Welcome, Ben.
Good morning.
Good morning. So it looks like in many ways we're seeing we're seeing Bitcoin and ETH down since the start of the war. But relative to alts, we're seeing it down not as much. Is this a flight to safety within the crypto complex, and at the same time just a walk away from crypto in general because of the risky asset, the risky nature of the asset? In other words, we're seeing kind of a risk-off mentality in crypto.
Yeah. I mean, I think that's exactly what we're seeing is the migration out of more speculative kind of altcoins into the blue chip holdings, Bitcoin and Ethereum. And again, even if you're looking at the trajectory of Bitcoin, I think last time I was on the show, actually, it was towards the end of last year, our models were actively raising cash. So the weakness, was there before, and it was really the Fed pivot that kind of catalyzed the sell-off in Bitcoin and traditional risk markets in general. You look across equity markets, broadly. What was interesting was the crypto markets priced in a lot of bad news really quickly. And so the war in Ukraine certainly didn't help. But we are at a period now kind of below 40,000 where historically we've started to see the buyers come out of the woodwork. So the structural bull case is intact. And I think part of that is, as you said, there's a migration or a consolidation within the crypto sphere around kind of the core holdings, Bitcoin and Ethereum.
Nonetheless, I mean, there might be some, all things being equal, if this had been a different environment, a price below 40 would have seen that kind of consolidation, as you were saying. But we are kind of in a very weird time right now. We're seeing oil skyrocket. We're seeing gold go above $2,000. So does that necessarily mean that will that translate to ultimately a higher price in Bitcoin if we just haven't seen that kind of a reason why that would happen for the time being?
No, I mean, that's the $1 million question. And you hit the nail on the head, too. I mean, a lot of people had kind of touted Bitcoin early on as the digital version of gold, and it was the inflation hedge. And, we didn't see the flight to safety bid in Bitcoin that we did in gold, particularly at the start of the war. Now, interestingly, we did see the flight to capital safety bid as, Russians started, actively trying to migrate out of rubles into Bitcoin. But, to your point, times are different now. And, oil is a tax on everything. Oil at this level, which we haven't seen since more than 10 years ago, 2008 era, is, just a drag on economies globally. So I think the big question really is, how bad does this war get? How long does it persist? And then ultimately, what, if anything, does that do to impact the Fed's behavior going forward? Because let's not forget, that was the catalyst for this entire sell-off was, the Fed's plans for not only rate hikes, but asset balance sheet tapering. So, what does that look like when we come out of this Ukraine crisis?
The thing though with the Fed and how it was behaving in terms of tapering, in terms of lowering its balance sheet, that was kind of broadcast for a long time. We knew it was coming. So the price in Bitcoin, in many ways, if you believe in efficient markets, and perhaps digital markets aren't efficient yet, but if you believe in digital markets, you would say, look, that was priced in. That didn't matter necessarily to what's going on in Bitcoin. The other question or the other aspect of this is this war in Ukraine also may have highlighted the fact that it is hard to buy Bitcoin to get your money out of a country like Russia, for instance, if you're sanctioned, if you're a sanctioned individual, if you're an oligarch who has billions of dollars that you want to quickly transfer into Bitcoin and then sell it. We haven't seen those kind of flows out of Russia. Gold, on the other hand, much fungible. You can shave off the serial numbers on your gold bars and sell it quite quickly. Has it sort of made that case? And has this war made the case that Bitcoin is not that safe of an asset after all?
So, I mean, you raised two really interesting points. And again, it's the contrast of Bitcoin versus gold. Bitcoin has the appeal in that it's entirely digital. Theoretically, it should be easier to, move assets or move that store of value, anywhere in the globe. But what we saw was, kind of a rush for global regulators and authorities everywhere to crack down on specific wallets. And they were really leaning on the exchanges to blacklist certain wallets, within Russia, within these oligarchs, which did make it difficult to use Bitcoin, to get out of the country or subvert capital controls. One of the things too that we've seen is that blockchains are very transparent. It's a lot easier to trace blockchain holdings than, in some cases, as you say, gold. So I think that narrative has been tested a little bit. I also think, though, it does highlight kind of the permissionless and trustless aspect of digital currencies, which is still unique, which is very much intact. And, you look at like the Ukraine raising $50 million in crypto very quickly. I mean, that was extremely efficient. That was done in a perfectly trustless environment. I think that was a very excellent proof positive of crypto. But as you say, using it for oligarchs to get money out of the country, especially when relative to gold, it's a relatively small asset class still. Gold just can withstand huge flows. Russia's been stockpiling gold for years, in a way that they wouldn't be able to do in crypto. So,
Ben, what's your strategy for navigating this uncertainty in terms of portfolio management?
Yeah. So as I said, our models were pretty early in taking risk off the table. We've just started opportunistically taking risk again. Our models were being very tactical in this environment. So, a couple of weeks ago, we had a quick risk on, risk off trade. Actually, this week, we're starting to tiptoe back into the market. Structurally, when we look, the price action is weak. It is largely exogenous driven, as you guys mentioned, with kind of war in Ukraine. A lot of the Fed action or the Fed expectations have already been priced in. Structurally, we're seeing a lot of bigger wallets coming and buying at this level. We're starting to see institutional capital buying at this level. We're starting to see more wallets become holders rather than transactors. So between kind of 34, which is the hard support, and 40, this is generally when we see buying come out of the woodwork, but it's not something you want to go all in on. It's something that we're starting to tiptoe back in on.